I'm in Manhattan, New York, and this is iconic New York Stock Exchange. I mean, I studied international finance and business, and wanted to be like on the stock exchange, like a derivatives trader or a stock trader. And this is, the tagline is the world puts stock in us. Generally, stock exchange deals in, equities, debt instruments, and derivatives. Then there are also commodity exchanges, like Chicago Mercantile Exchange, Chicago Board of Trade. So this is like, this is the world's, we can call it as emperor of stock exchanges, or, emperor of securities exchanges, because the turnover is in trillions, like, Nvidia crossed 4 trillion recently. So this is iconic, New York Stock Exchange, and, the biggest exchange in the world. Every country has its own exchanges generally, and every capital or, financial capital has one. And this is the emperor of stock exchange, the biggest stock exchange in the world. So this is Wall Street, and we just enter the iconic Wall Street, where we had already we have already seen the American Stock Exchange. That's the American Stock Exchange, and then from there we see the iconic. This is the American Stock Exchange. This is the Broadway and Wall Street. So here you have Fulton Center, Day Street, Century One, Liberty Plaza. This is the Trinity Church we have just seen, Memorial Hall. This is the New York Rector Street, and then this is totally is the financial district, and so on. So that's the American Stock Exchange, and then we move to the. So this is we are moving towards. Can't really get. We are just moving towards Wall Street now. So this is the Wall Street. Just take a left, and this is the Wall Street. So this is the Trinity Church. So the church just besides Wall Street, and this is the Bank of New York. Yeah, this is the Wall Street. It's written as Printemps. I don't know what it means. Printemps. Bank of New York. So this is the New York Stock Exchange. Yeah. On the Wall Street, where fortunes are made and lost. So this is the Wall Street. Yes. This is the New York Stock Exchange. The tagline of New York Stock Exchange is like the world puts its stock in us, and that's like. Unfortunately, these scaffoldings destroy the views of buildings, but we have to live with it. So yeah, that's a Trinity Church, and this is the Wall Street. This is a building near the Wall Street, so it's called Equinox Holding Wall Street. This is the Wall Street. Yes, this is the New York Stock Exchange and the Wall Street. I keep going. So this is the Wall Street. Yes, this is the New York Stock Exchange, and this is the Trinity Church. So these are again the high-rise towers. This is the Wall Street. Yeah, this is the iconic building that they show when they show New York Stock Exchange and the Wall Street. So this is the subway just in front of the Broad Street station. So pediment and a lot of sculptures on the New York Stock Exchange pediment and the iconic. Yeah, you see the details on the columns supporting these Roman pillars or columns, and then the New York Stock Exchange is written here, and then you have the sculptures on the pediment. Pediment. I'm getting into the details of the sculptures. The triangle, pediment, and then you have these men and we need some interpreter to understand what those sculptures mean, but those are the sculptures. But this is the end of the pediment. Then the whole thing looks like this. Yeah, this is iconic New York Stock Exchange, and where iconic companies are listed, and their dream is to get listed. This is America has these three kind of stock exchanges, where New York Stock Exchange, then Nasdaq, and American Stock Exchange. New York Stock Exchange, Nasdaq is for generally preferred by new tech companies, right? New tech and new innovative companies on the planet. New York, there is no formal distinction, but New York Stock Exchange has probably heavy, the old industry or old economic kind of companies, and these are all the buildings surrounding the New York Stock Exchange. And it's like what happens is Tokyo, London, and New York are the three major stock exchanges, the biggest ones on the planet by far. And then you have the second tier other stock exchanges, right? Like Mumbai, Shanghai, Hong Kong, Dubai, and all these other exchanges, Frankfurt. All the major capitals have an exchange, have a major exchange, like Milan has in Italy, right? And each of them have an indices. This is called the Standard and Poor's, and they collect many score. That's called the S&P, like index and so on. So this is the most iconic part of the world, in which the companies raise money through the stock exchanges by way of equity or debt, and equity is of course the subscribed equity in the form of the duration of maturity is more than 10 years, and then bills less than 90 days or very short time. And then notes are between this time to 10 years. Generally, that's the broad classification, but there can be So and then you have the debentures, you have the secured bonds. All these are the debt kind of instruments. So equity and debt are the two major kind of instruments. And then on the debt side, I'm explaining all these bonds, notes, and bills depending on the duration. And then you also have the secured notes, secured and unsecured. So what happens is companies raise money through a mechanism of these structures and these mechanisms, and then these are traded on these stock exchanges. That's where the importance of a stock exchange comes. So stock exchanges has been around, probably the oldest, I believe Amsterdam, or this New York, or and all this have been in existence for hundreds of years. 1600s or something, yeah, because the tulip flower, the boom and all the stuff that we hear from, right? So those are traded, and the traders are based on their view and information and all those stuff. They put their bets, like this company will rise, or this stock will go up, this company is likely to increase in profitability, and then those are traded on these exchanges. Before, there used to be a public outcry system where people cried out on the floor of the exchange, and they will buy and sell and take orders. But now it's electronic. Since the past 20-30 years, it's mostly electronic, and they are in dematerialized form. The shares and bonds are in a dematerialized form. And then what happens is those are traded, and based on the demand and supply. The whole market economy is about demand and supply. So if the demand is more, then the price increases. If the demand is less, then price increases. Sometimes there are fluctuations, wild fluctuations in the marketplace, like the Lehman crash, right? Market falls by tens of percentage of points, and because market assumes that the whole housing will collapse, And suddenly, generally, they say the rise is gradual, but the fall is with a vengeance, generally, right? It falls 10-20% sometimes, and then that economy is down, or all this stuff happen. A recession and all this stuff, right? So stock exchange is generally considered as one of the barometers of a country's economy, right? I mean, major stock, and now the growing economies are India, China. India has a big stock exchange in Mumbai, and then almost equivalent to Nasdaq is National Stock Exchange. Shenzhen in China is also has the biggest exchange. Shanghai, then Tokyo, of course. Tokyo, London, and New York are the biggest exchanges in the world by far. And generally, the way it happens is because the Earth moves around, and first Tokyo gets the sunlight first. I mean, day breaks at Tokyo first. So the Tokyo traders do their trading, and then London is actually simultaneously both with New York and Tokyo, because the close of Tokyo, almost London wakes up, and then when London starts trading in a way, and then London guy will ask, what happened in Tokyo, and that's how the trading in London. And then the third, I mean, the New York is the last to wake up because it's on the western hemisphere, right? And as per the Earth rotation, so New York, when the trading starts in New York, Tokyo would have ended, and then London, closing hours of London, or they're such kind. So New York, these New York Stock Exchange traders would have a question of like, what happened in Tokyo and what is happening in London. So that kind of around the world markets are they are generally open Monday to Friday, and leaving the Saturday, Sundays, weekends, and public holidays. And then the stocks and bonds are traded. Like there are so many other instruments. These are the straight instruments, easy instruments, and straight. But there are other instruments like derivatives, which are derived from an underlying asset, like the options, the futures, and forward contracts. Forward contracts are like of a pretty simple in a pretty simple term. If someone says like I will buy this at a later date at this price, they set a forward price, and then two people agree on it. Sometimes the reason forward contracts is they are between two people. Sometimes they may not be formally registered with verbally agreed on all these complications. So futures are like formal forward contracts that are traded on the stock exchange. So futures, you can't really renege on your promise, because any it's called an IOU. IOU kind of IOU is an obligation that you have taken. These, derivatives are derived from the basic underlying asset, basically. So derivative futures are formally registered on the stock exchange, on the futures exchanges. Generally, there are in the stock exchange, there is a segment for equity, there is a segment for debt, there is a segment for wholesale debt market segment, and then there is a segment for the derivatives, basically. Derivatives sometimes is a totally different exchange, sometimes spun off from the main exchange, or like you have for a commodities exchange, you have the Chicago Board of Trade. I was in Chicago recently, and I saw the Chicago Board of Trade office. Then you have a mercantile exchange, a Chicago Mercantile example, for example, or different. For example, in London, you have the bullion exchange. In Dubai, you have the Brent crude price are generally decided in Dubai. That's like the bellwether for Brent crude prices around the world. London is a bellwether for the bullion prices. So this time there are different kind of exchanges, but the most popular is of course by far, and with the most market cap is New York Stock Exchange. It's most iconic place on the planet, right? With respect to the emperor of stock exchanges, we can call. And then these stocks are traded, stocks, bond, because equity and debt are the two, and the derivatives are the three basic categories of instruments that are traded on the exchange. Equity is straight equity. A company has a mixture of equity, debt. Some companies may decide that we don't want any debt, we want to be a zero debt company, and then they may not take any debt, because some companies are very strict about financing policy. They don't want any debt, they want to be a debt-free company. Generally, debt-free company, just like in life, if you are debt-free, you're happy generally. If you are with debt, you are with a lot of guilt, and you're stressed, and so on. So, and then these derivatives are, section of the exchange, or, if it is a separate exchange apart from the main exchange, there are futures, options, and, forward contracts traded on that exchange. So futures are these, forward, delivery, on a future date, or, and then they keeps carrying forward, and, then there is a settlement. Settlement is the time when, the exchange is settled. For example, if somebody has bought an equity, bought a share in some companies, so for example, if he has bought he pays for the share and he needs to get the share. But these days, most of the stock exchanges have a rolling settlement, which is like they're settled in the same day itself, or just the day after. So your money gets debited from your account, and then you get the shares the same day. So before, it used to be 14 days, T plus 14 working days, which is almost 3 weeks or 4 weeks if there are holidays in between. So people used to do a lot of stuff like forward. They used to speculate in between these trades. They used to pledge shares and speculate and so on. So now that's almost not possible, because, and then there is something known as the short selling. Short selling is using negative news in a stock, or bringing down the stock on purpose based on rivalry, corporate rivalries, vengeance and vendetta and all this stuff, normal human feelings that are existing because pre-existing in creation. So because of that, they would want to bring a stock of a company down, or and then what happens is these companies come down. So people bring down a stock, vengeance. I mean, with a lot of vengeance, and sometimes that's the reason they say stock market functions with the market functions with both rational and irrational factors. Generally, in the long term, it rises. That's what. Sometimes what happens is companies trade off as a penny stock. Penny stock is less than $1, or 1 rupee or 1 pound or whatever, and they are just, and then they rise. I mean, if they rise, people make money. Like, for example, now Nvidia is, the market cap is more than 3 trillion or something, 4 trillion. Some people have made a abnormal amount of money. Similarly, Google stock and Apple stock and all these, Apple stock probably was 25 years or 30 years before it was a penny stock. So people sometimes just buy the penny stocks, and then they forget that they even have the stocks. They turn up into millions and billions. So yeah, this is so these derivative segments is when you have a future agreed date. Derivatives is also the way that many hedge their prices. For example, airline hedge their prices. Emirates, an example that hedges their prices, because if the fuel prices falls or rises drastically and dramatically, then it's gone. The company is it's like turns turntables and turn down under. So and then so these are the forward contracts. That's the reason the three broad major categories are equities, debt, and derivatives. Derivatives are these futures, options. You have different ways of the pricing the options, like Scholz model and so on. I studied international finance and business, so I kind of we studied those kind of models. I wanted to initially work as on the stock exchange, but somehow I went into another field. But so these three segments constitute the majority of the stock exchange, and then the fortunes are made and people become extremely rich. They buy up houses, buildings. People fall down also when people lose all the money. So it's millions and billions that people make or lose money in these exchanges. So these exchanges, as I was telling you, open Monday to Friday and leaving the holidays and the weekends. And then there is they have these set times, like usually they work for about 7 to 8 hours. There have been some proposals to make it 24 hours even now even with the introduction of cryptocurrencies, right? So Bitcoin and all this stuff, they are actually currently in the even Bitcoin exchange, I believe Coinbase has been has been listed on the New York NYSE or Nasdaq. I don't know. Nasdaq, the headquarters is near Times Square. Actually, yesterday I saw Nasdaq headquarters as well. So these are the trade, the financial assets, as they call you, right? These are not physical assets. These are not like land or vehicle or mobile phone or something like that. These are financial assets, right? And they are traded on the market. So trade basically must involve two parties. Trade involves a buyer and a seller, and then market the price is discovered through market information. Basically, if some information comes, for example, American economy is going to boom in the next 2 years, right? Or some positive news comes, from Washington D.C., some positive political news or something, and then stock prices are likely to rise. So it's a combination of both rational and irrational factors, basically, right? Rational factors and sometimes irrational factors, and fear, grips the market and market falls down, or sometimes, what is it called, rash decisions, or what do you call, kind of, false news also triggers the market sometimes, false positive or false negative news. So why market for rises or falls is definitely like a movie, like, why a movie succeeds or fails, like it's like a gamble. In one, some people say stock market is a gamble, right? So, and then based on that, investors perception, they buy and sell, right? Based on the positive news, the stock prices go up. On the positive news on three fronts, like on the economy, on the country economy or the region economy, then on the industry economy or on the company's economy. For example, if there is aviation stock, right? If people expect that, could during COVID pandemic time, the flights were cut off, right? Then the outlook for the airlines industry, like, Delta, American, all these companies that are listed will be down. Then similarly, in the trickle down effect will be, Boeing will is likely to make less planes, or Airbus is likely to make less planes, and then because of their share price are also going to fall down. So it's a contagion. That's what they say. You can't. It's nobody is independent here. Like, one party or the other party actually basically, like, they make or lose money. So that's the reason it's not independent. That's the reason then there is short selling. Short selling is bringing down a stock on purpose, on the some vested interest might want to bring down a company or a stock, and then that's short selling. That's the reason short selling is sometimes what happens is the stock exchange also apply circuit filters when there is abnormal drop, like 10-12%. Then they say that it's been suspended. those those securities is a broad term including equities, bonds, and derivatives and all that stuff. That's the reason it's called a securities exchange. Yeah. US, the regulator is the Securities and Exchange Commission, so they regulate these markets. So that's and then so the trading happens every day, every working day in a way, and every working day, leaving the weekends and the holidays and declared public holidays. And then the stocks rise up, down, they fluctuate by a great amount. So people speculate, people short sell, people do various kinds of because based on the information view, right? The viewpoint. Like, for example, if they say the economy is going to boom and people are going to travel more, then airline stock price are going to rise up, because and if the airlines see a lot of bookings in the coming quarters, and then because airlines people may speculate or expect that that they have a point of view that that airlines need to sell more, will need to sell more, may sell and make aircraft. So Boeing prices might go up, Airbus price might go up, or Embraer prices may go up, or Bombardier, small. And if rich people are buying more jets, then those prices. So these are like based on the perception, based on information that arrives. Information arrives continuously in the market, because this is called an efficient market. Efficient market is one where the more the information is priced into the market actually. That's what they say. The price of the stock at that moment, price of any security for that matter, stock, bond, or whatever, or equities, derivatives, is priced into the security. That's what that means, that all the information till that point has already been captured and absorbed into the stock price representing. So that's how that's really important, right? And that's where they say that stock market is the most important barometer of an economy. So, for example, if you say if the economy is down and people are likely to lose jobs, then people are not likely to buy many things, or they may cut out their the fanciful expenditures, or their discretionary expenditure. For example, people may not travel. I mean, they may want to save everything for their food, for their bills and food, and then in that case, then some retail company share price may come down, or some luxury items prices may come down, right? Because the people who will buy luxury when when there is crisis in the market, or when there is going to be recession correction or something. So these positive, negative. So it's basically a market is a negotiation between buyers and sellers, and requirements for a market is there must be two parties, the buyer and the seller, and then second requirement is information must be is absorbed information and viewpoints and their perceptions. All these include fears, all the positive and negative aspects of human kind of emotions. So both the positive, if the economy is booming, the economy will go up or it will go down, like recession, layoffs, jobs going and all this stuff. So all these are priced into all these are absorbed into the stock price, and then that's the reason you have you have this that's what is this stock exchange or the securities exchange. As I was telling you, securities, the three main broad, not the three, but the main broad categories are equities, debt, and the derivatives. Yeah, derivatives is always about future, lock-in, be it futures or options, or you have future. That's the reason you have futures on commodities, you have futures on metals, you have futures on petrol, the fuel and all this stuff. So they may lock in a future price of delivery and exchange, because prices can go up. For example, if the future oil aviation fuel go up and down, if they go up, the airlines are bankrupt, and that's the reason many airlines have declared bankruptcy just after the summer, because the winter season travel is less, significantly reduced, and then if the prices go belly up, then airlines go. That's the reason many airlines, if the fuel prices are up, they declare bankruptcy. And then if the fuel prices are down, then like for example, that's the reason it's at three levels: the economy and the state of the world, the industry the company operates in. For example, aviation, it could be retail, telecom, which are banking, which are industry, right? And then the company itself. So these are the three-tier ways in which a stock is generally analyzed and understood. And then you have also something known as the technical analysis. Technical analysis is where the stock is analyzed technically based on the charts and growing. And there are it's actually an algorithmic, basically a tool in which traders use the past future trends, and they try to extrapolate into the future. So technical analysis, there is two types of one is the fundamental analysis. Fundamental analysis is going on the fundamentals of a stock, the balance sheet, the income statement, and balance sheet is basically the assets and liabilities, and then income statement is like the profit loss and the revenue, the profit loss and so on. These are the major statements. Then they have schedules attached to those statements as well, which describe the headings and subheadings, and then there are footnotes, etc. That's basically accounting, basically, right? Chartered accountant basically does that. And then reading the financial statements, right, which could be balance sheet or profit and loss statement. Profit and loss statement is about how much money came in, how much went out, and what is the profit, what is the gross margin, and so on. And then balance sheet is about the assets and liabilities, with the assets that the company has on your liabilities. Actually, in the modern companies, like the modern tech companies and your modern companies that are very modern, their assets are basically human brain, basically, because the software, consulting, pharma, all these what are called known as a knowledge economy, right? Their capital is human brain, basically. So it's sometimes very difficult to quantify, like and for a company like Coke, or which are these great brands, right? The brand equity itself is measured in dollars. Like sometimes people estimate their brand equity in dollars, and then the reason for that is it's because the intangible. For example, everyone in the planet knows Coke and Pepsi, or Boeing, or this IBM. There's companies like IBM, HP, Apple, Google, YouTube. All these have so their brand equity. So there are tangible and intangible assets, and then how they are valued. There are various means, and then there is a depreciation also, in which asset is tied down, right, pared down to this. So the analysts who are working in these firms, in these trading firms, or they actually analyze all these balance sheets and all this stuff, and then they come to a viewpoint. Okay, this quarter, and based on all the market reports, and they study a ton of market reports, and then they also study the patterns in the industry, and then they try to arrive at a point of view. Nobody can be right or wrong here. It's people succeed sometimes, people do all the analysis in the world, but they fail sometimes. They don't do analysis, they just succeed. So making money or losing money is not like it's not like a guaranteed sunrise in this kind of stuff. Your people can only do the best and do their best and best efforts. So
Can we stop for a second?
so here, that's what in this stock exchanges, especially particularly this is iconic stock exchange. The tagline or motto of New York Stock Exchange is the world puts its stocks in us. They trust. Stock exchange is basically trust. If you're really looking inside of the stock exchange, I'm seeing the gold plated kind of the roof. Probably we're not allowed to go inside because it's a very data center and secure site, right? They have a lot of data, and we're dealing with the world's data. So this is stock exchange. The main things being the main items being traded on the stock exchange, or any being financial products. Financial products mainly being stocks, equities, and derivatives. And commodities exchange, they trade commodities, like the future price of, for example, 3 months down the line, the price of petroleum or aviation fuel, or diesel, or kerosene, or something like that. So they decide, okay, we'll sell or buy at this price, and then that's what is a futures contract or an options contract. Options, you have put and call options. You can decide after 3 months, and then there are rollovers and so on. So you just put up a very small, like it's like an insurance policy. You pay a small premium to get a large insurance, right? And that's the reason options, put and call contracts in options have the small, you just pay the premium, and then you really get that and then it rolls over. For example, if a company feels that the oil prices are going to go up, then an aviation airline company may want to say, okay, 1 year down the line we will have this price of petroleum or aviation fuel. So they may hedge that, and then if the price goes up, then the airline company is in benefit. If the price goes down, then the other party is in benefit. So it's a win-lose zero sum game, basically. Somebody loses, somebody wins. Somebody wins, somebody loses. So and the basic rule is buy low, sell high. Buy low, sell high, you make money. Buy high and sell low, you lose money. So that's the stock exchange is a market. It's almost called as a perfect market, because this is electronic, and these days every news, there is nothing that can stop these days. Every news is out. I mean, there's nothing that can be hidden these days, and there are no secrets almost. So that's the reason it's almost called a perfect market, because all the information is coming into the market. The investors, the traders, investors are actually they're absorbing that market dynamics, and they're pricing that into pricing the information into the asset price of the asset. Asset is financial asset. Commodities exchange also is financial asset, like futures, options, and all this stuff. And then they have to deliver those commodities, and they will usually roll over, right? They might not be physical delivery, they may roll over, and so on. Like gold, bullion exchanges in London. Chicago has the Chicago Mercantile Exchange and the Chicago Board of Trade. And these every country right now, India has started with commodities exchange, national commodities and derivatives exchange. It's called NCDEX. Then there is MCX, multi commodity exchange. Of course, the main Indian stock exchanges are the Bombay Stock Exchange, Bombay Stock Exchange. To Nasdaq, there is NSE, and generally these Nasdaq type exchanges, like the newer markets, like Neuer Markt in Germany, or these are the alternate markets in which new small companies are established and listed, like because small companies do not have those marketing or branding power. They are just starting small, but they might be world changing ideas, right? I mean, like the tech companies or the biotech companies, or many new technology knowledge companies. So what they have is, sometimes they may lack even the collateral to get a bank loan sometimes, because if their brain is the only power that they have, so employees and their brain power. So for such innovative companies, Nasdaq stands for National Association of Security Dealers Automated Quotations. And Nasdaq style companies, basically, like they are for this new economy, what is known as a new economy companies. Generally, this New York Stock Exchange is considered old economy heavy. It's not, there is no, nothing that's actually, but generally considered old economy heavy, like chemicals, metals, banking, and all stuff. But the new economy, like Nasdaq, is like they are trading in this because the listing requirements are very strict, and the companies have to submit their quarterly financial results, and there are heavy penalties for the companies and their directors and their managers if a company provides false information information or something, because investors are getting affected, right? They are losing money or they are making money. That's the reason there is something also known as insider trading, in which people having insider information. So it could be the higher level management, or director level people, or the board of directors. If they have are privy to a lot of information that the company is planning to do in the future, or it has gone or it's if it has into any mistakes or anything, and if they use that information either to profit, or to profit pay themselves, or to make the investors lose, then they are also subject to heavy penalties and the jail times and so on. So insider information, as they call, right? There are very strict rules on insider information, right? I mean, it's a penalty, but generally it's very difficult to prove any insider information allegations. Generally, I mean, how can yeah. So if a husband and wife, if they are working in two companies, then how it's very difficult, right? They may be sharing information about their companies, but how will you say that? So this is stock exchange. This is the most iconic New York Stock Exchange, and this is the most iconic financial powerhouse on earth. So this is the iconic New York. I start. I'm in Manhattan, New York, and this is the iconic New York Stock Exchange. I mean, I studied international finance and business, and wanted to be on the stock exchange, like a derivatives trader or a stock trader. And this is, tagline is the world puts stock in us. Generally, stock exchange deals in, equities, debt instruments, and derivatives. Then there are also commodity exchanges, Chicago Mercantile Exchange, Chicago Board of Trade. So this is this is the world's, we can call it as emperor of stock exchanges, or, emperor of securities exchanges, because the turnover is in trillions, Nvidia crossed 4 trillion recently. So this is the iconic, New York Stock Exchange, and, the biggest exchange in the world. Every country has its own exchanges generally, and every capital or, financial capital has one. This is the emperor of stock exchange, the biggest stock exchange in the world.